Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 11th of February 2024. And yesterday we produced our regular weekly financial and markets update. This video is a repeat of that one, where we discuss the reasons why gold and silver prices fell last week and what we envisage is going to happen this coming week, as there is a considerable amount of economic data coming out of the United States, including the all-important CPI figures. So let's take a look. First, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not as yet joined that channel. Looking at precious metals, gold fell $16 last week, falling from $2,040 to $2,024, having hit a high of $2,044 and a low of $2,015. That's just a $29 spread, not a lot, and a fall of just under 0.75%. In our last update, we predicted that gold would trade between 1975 and 2075 and would operate broadly in the middle of that range, which it did most comfortably. In sterling terms, gold finished the week at £1,605, down £12, and in euros it was down €7 at 1,884 euros. Now silver also fell. It was down 8 cents, falling from 22.69 to 22.61. Having been as high as 22.75 and as low as 22.16, a fall of 0.35%. Now last weekend we forecast the silver would move between 21.25 and 23.25, and once again it did this comfortably within the range. We admit though that we expected a greater difference between its high and low, which worked out at just 59 cents, which is the lowest for some considerable time. And this tight margin suggests the traders are awaiting the more important economic news due out this coming week. Now in sterling terms, silver was down 8 pence at £17.94. People who follow the channel know we want to pay £15 or less because of the VAT. And in euros, it closed at 21.01 euros. That's down 0.09 euros. The gold to silver ratio fell very marginally from 89.9 to 1 to 89.5 to 1. Now Bitcoin is up $4,000 the last week at 47,116, though by the time you get this video it may have moved considerably from there, though we suspect it's going to operate now within the sort of $45,000 to $48,000 range, because in less than 2 months we have the Bitcoin halving, which generally increases the value of Bitcoin. US equities were up again, but only marginally. The Dow Jones was up 17 points at 38,671. The S&P 500 up 68 points at 5,026. And the Nasdaq Composite closed up 362 points at 15,990, again hitting all-time highs this past week. However, we have to bear in mind that the Nasdaq is influenced by a relatively small number of mega stocks. The FTSE index, that's the UK index, closed at 7,572, down 43 points on the week. Bad news for inflation in that Brent crude closed up $4.86 at 82.19, and WTI crude closed up $4.56 at 76.84. We need to see oil prices well into the low $70 and ideally below that as well. Dollar index is up 0.19 points at 104.11. We said last week we expected it to hit 104 again, and it has done just that. Now we stated last week, quote, "So not a lot really to move markets, particularly from an economic point of view," unquote. And such proved to be the case. We were more concerned about potential military retaliation in the Israel-Palestinian conflict and the role of proxy actors within that conflict. We did, though, in fact, see gold and silver prices move down upon opening and then gain towards the end of the week, even though both ended marginally lower. Last week's data showed that services PMIs more or less were in line with expectations. The US trade deficit came in at minus $62.2 billion against expectations of minus $62.1 billion. You could not really get any closer. Initial jobless claims came in at just 2,000 lower than expected, and wholesale inventories for December showed an increase of 0.4%, compared with an expected or anticipated 0.3%. So really, as we announced, not much data to affect markets. That said, this coming week is likely to prove more exciting. On Tuesday, we have CPI or inflation data for January, and expectations are for a significant fall in the annual CPI rate from 3.4% to 2.9%. But that will only be achieved if the monthly figures come in at 0.2%. Core CPI is expected to fall year over year to 3.7 compared with 3.9, and again that will only happen if the January figures come in at 0.3%. On Thursday we have retail sales figures for January. Markets are expecting a fall of minus 0.2. If the figures are stronger than this, then interest rate reductions may be delayed further. And on Friday we have PPI figures, and again these can have an impact. Now of course the CPI figures, if there's a strong variance from expectations in either direction, will have the strongest impact this week on the dollar, equities and precious metals. There is no doubt that the equity markets, and to a lesser extent cryptocurrency markets, are attracting investors' money slightly at the expense of precious metals. With companies like Amazon, Microsoft and Meta dominating the equity landscape, together with exciting announcements on AI, we can see why these areas are attracting capital for the moment at the expense of precious metals, the latter faring much better during economic and geopolitical turbulence. So with this in mind, technical analysts agree that should gold fall below the recent swing low of $2,002, then we could see prices move down to as low as 1966, which is around the 200-day moving average and December's swing low. For bullish sentiment to come back to the fore, we have to see gold rise above 2045 convincingly, where it will then meet the next resistance level at 2088. Silver this week seems to have been supported at the $22 level, where buyers reappeared. If prices though should break down below 22, then a rapid fall to 21.50 and then to 21 cannot be ruled out. Equally, if silver can rise above that psychological resistance level of $23, then we could see some momentum eventually getting to 24. Now, whilst we saw a bit of a rally on Friday in silver prices, it could be argued that this was the result of short covering, while the intermediate trend still remains downwards. Much will now depend upon the mix of CPI data, geopolitical tensions and the attractiveness of the equity markets to determine what happens to precious metals over the next few weeks. So with this in mind, we are expecting to see gold trade this coming week between $1960 and $2060, that's $1,960 and $2,060, with $1940 to $2080 as outliers. We're anticipating silver to trade between $21.35 and $23.35, with $21 to $24 as outliers, and we are expecting a much greater spread than just under 60 cents for silver between its week's high and low. What do you think's going to happen? We'd appreciate it if you'd share your thoughts. Meanwhile, thank you so much for listening. Please, if you like this video, give it a thumbs up, subscribe, press the bell sign, and it just remains for us to remind you, please pop on over to Finances Do Matter and have a great, enjoyable and safe weekend. And as always, and it could happen this coming week, a prosperous week ahead.